Hello, folks. Brandon Chapman today. It's another TheoTRADE video for June 24th, 2024. And what a day today. Boy, look at as we see the market down, but it was one stock that mattered and only one sector that counts. We're going to talk about both those today during this video. But the S&P finished in the cash session down about 1/3%. Again, interesting. We were up today 9 sectors higher and only 2 lower. It shows that only one stock matters. And folks, drum roll, please. That is Nvidia. Nvidia is the only stock that matters, finishing down 6.6% today. And you think about this, how big of a move is the last few days? It's big compared to the past, but guess what? We've only seen less than a 38% retracement of the move from April 19th to the high on June 20th. This is something over the last week in this space right here. We had several bearish option trades in Nvidia. Today is no different. Another trade stepping in. This one is for the 2 August expiration. Let's get out here to the 2 August. And boy, it's way out of the money at 96. 9,000 contracts traded, 8,500 traded in one print at the 96 strike price. And boy, you look at 96, we're down here beyond the 261% retracement. We're really looking at this thing maybe going back to 80 or more. I mean, is this unusual? Should this not happen? Well, guess what? I mean, this is a 1/3 retracement just since the April lows. What if we go back to the last downtrend that we experienced back in 2022 and we draw a fib off of this longer term trend? I mean, a 1/3 retracement is only at $90. 80, 75 get you back to 50% retracement or the April lows. So it just shows how extended the price is up here and why this has been the only stock that's mattered for the S&P 500. And again, S&P finishing down 1/3%, technology sector down 2.5%, everything pointing to Nvidia. We have mined a lot of future return, brought it back to the present, and this is the point where we start to give back. The only question is how much. Now, think about the S&P 500 right now. Again, looking at the VIX. I mean, how perched we are. Don was talking this morning, if we go back to the S&P 500, looking at the SPY intraday today. Well, think about it. We got this little boost right off the bat. You see Nvidia down. Don talking about, look, I mean, this starts to break. If Nvidia breaks, we may break the market. It didn't quite happen exactly that way, although the S&P did finish down 1/3. We do have to watch for additional downside here. But again, that was a very important point to make, is that we're dependent on Nvidia. This yellow line represents a large trade that was made back on June 20th. 1.2 million shares traded in one print, 546.48. We tested that level as resistance today, previously kind of support back here on the 20th. Now we're looking for where do we go from here. Notice we did finish the lowest session. We're looking at this thing maybe rolling back even further. And boy, when you look at the volatility markets, it's certainly shaping up for a correction, a 5 to 10% pullback in the market. Why? The VIX right now is low. We're starting to push higher. But more importantly, look at skew. Skew right now is pricing. We dipped, I think we have the 24th today. I had to redo this video. But we have the 24th. It's at 147. Skew is high. It's elevated. Was it 152? Was as high as 162 on the 13th of June. We look at front to back month volatility, or back to front month volatility, 3-month VIX to 1-month VIX. We're looking at, we touched up here, we'll go to 5-day chart, 5-minute. Notice this was above 1.2 for the first time in many, many months. This is an indication the market's pricing in future volatility right now. The skew tells us that volatility is expected to the downside. And again, of course, the inverse nature of the VIX and the S&P just points to the downside risks that are existent in the market right now. And again, we'll see where we move from here. But again, if we're to bet on a 10% up move to 590 or a 10% down move to 490, we're basically saying what? The options market's pricing on the 10% down move. And this is a point where you start to take profits. You maybe start to hedge. You start to realize that this market is not exactly your father's market, or the market that we saw over the last number of months with the gamma squeeze higher. What's happening with Nvidia, we may start to see the gamma squeeze to the downside. Okay, that negative feedback loop. And again, how did the worm turn with this big outside day here? It certainly happened before. It's just the selling is becoming more immediate and more excited. And now all of a sudden, are we going to start to explore more potential? Now, when we think about what sector that matters today, well, I'm pointing to energy as the only sector that really matters. Why? We broke out of a channel, but more importantly, if you look at oil, oil today is up. But more importantly, the term structure of oil futures is in backwardation. Notice the falling prices as we go out in time. It's going to push these back month prices towards the front, and that's because we have a positive net cost of carry, right? The cost of finance, the cost to store is less than the cost to lease the oil out. There's an implied shortage that's being priced in and has for a while. And what we're seeing right now is that today, with the weaker dollar, not benefiting the stock market, but certainly benefiting oil and benefiting gold. If we look at gold futures slightly higher today as well. But going back to energy as a sector, we're experiencing a breakout here. You can look geopolitical risk. Certainly we're producing a lot of oil, but supplies have been drawn a little bit. We got to refill the SPR at some point. That's the strategic petroleum reserve. Those salt caves need the oil in them before they start to go to waste. The point being is that we have some demand for oil supply. We'll see what happens with OPEC. They've kind of come to their agreement. They're going to cut production for a little longer. There's a reason why we're in backwardation, right? There's a reason why we have an implied shortage, whether it delivers on or not. This makes sense. Well, what about utilities? Utilities were higher. We gap lower in the open. We rallied throughout the session on the back of what? Let's look at TNX colon CGI. Crazy symbol in here for the 10-year Treasury note yield. Yields dipped a little bit here today. But remember, the Fed funds rate's 5.25% to 5.5%. We're basically 1 to 1.25% below. Maybe we could stretch down here closer to 4%. But the problem is the risk right now is to the upside in yields. We have PCE coming up this week on Friday as well. Again, does that come in hotter than expected? Point being is that yields are stretched to the downside. And is the Fed really going to cut this year? I mean, it certainly seemed from a lot of the Fed heads, Fed speak last week, we're not really looking for that. But guess what? Look, the market has priced in rate cuts or begun to price in lower yields, lower Fed funds rate. This may reverse. And can we get back to 4.75 again? Maybe. If the Fed's going to cut this year, it's probably because we're experiencing dramatic weakness. And yes, that may drag down oil if the growth outlook materially changes. That's probably in accordance with a major sell-off in the S&P. What we're seeing from the VIX and the futures, from the skew and everything, all this other stuff together is suggesting a 5 to 10% correction, which at least probably gets us back to the lows from April on the outside here as a result of the signal that we're seeing. Yeah, we got to be careful, right? This is a slippery slope, and we're starting to see the quiet kind of end of summer here. It may come with a pullback. We start to realize the Fed's not probably moving unless we start to see material weakness economically. But again, that can cause energy to hold up. That can cause energy. That can still mean energy prices rise. And you look at some of the space and energy. We have the bearish option trade in Nvidia. Well, we got bullish option trade in Exxon as it's breaking out of its channel, looking at testing 120, maybe as high as 124. The trade in Exxon today is a 5 July expiration. It's out of the money here at 119, 6,100 contracts mostly bought. 119's right here. Again, we're looking for some retracement of the downtrend, maybe even a 100% retracement getting back to 124. Another stock in this space, Devon Energy, right? More of a producer, a bigger downside. Yeah, we've been kind of winnowing in here for a while. Today's breakout, okay, above average volume. As we look at Devon, the trade in Devon today is at the 28 June. That's for this week. On the call side, it's in the money right now because of the movement today. But the 47 strike, again, there may not be quite the out of the money stretch here or expectation. But boy, you start to look at the downtrend. You start to price in the potential retracement. 49, maybe 50 here, maybe even 51. Again, we're looking for near-term upside expectation, just retracing the prior trend, maybe even a full retracement if oil prices continue to rise. But what's happened of late is that energy stocks had not fully participated with the breakout here in CL. But today, They play catch up as we saw rotation out of technology and mostly into energy. And this is the only sector that matters right now today that you could really hang your hat on for the move. Financials, yeah, it was a big move. We faded towards the end. Why are financials rising at this point? Why are staples? Why are utilities? If we're going to see a near-term rise in Treasury yield, so watch for that. Key off that. Does the 10-year yield continue to rise off of this low? And in that case, we're probably not buying what's happening right now with these sectors that were some of the top sectors, or really all these sectors. A lot of them are kind of lagging around in here, for example, but really the ones who are kind of breaking out: financials, staples, utilities. Again, if yields break to the upside, be careful. This may be a bullish mirage we're seeing just because of some rotation, some selling out of technology. We may start to see some broader base selling when people wake up and realize what happened today in technology and specifically to Nvidia. We may start to see some outflows. Just to point out, TQQQ, this is a 3 times leveraged product, really the shares outstanding. The shares outstanding have been drifting here really since when? About November. We're seeing money being pulled out of TQQQ. That's the bullish one, right? Look at the bearish side. SQQQQ, right? SQQQ .SO, shares outstanding, right? Shares outstanding since that point have been increasing. In the last few days, we've seen money flows flow into the short, triple short ETF. Point being is that we're already starting to see some flows, and we have right now, as far as SPY, QQQ, Dawn took a put today off of the high, towards the high today, intraday, and sent us an alert out to our members to close it. Did very well in the put today with QQQQ, but again, Nvidia was not participating. Qs were kind of rallying upward. It was a very precarious perch for QQQ, but bigger picture, we're also seeing what? Record short interest. What's going to drive the Qs from here? Right? We got to see that Q, that short interest being recreated to help kind of a stat, but it's going to have to go through the downside, and that may lead to redemptions and other things that may cause more downside drift, and that's kind of the expectation right now. Now, again, if the dollar remains weak like we're seeing today, GLD is a space that may test its highs, right? Gold may go up as the market goes down. Gold may outperform the dollar. The dollar may outperform other foreign currencies. Well, if we look at GLD today, the trade in GLD, this is the August expiration. So it's out here just a little ways. Not a lot of gamma. It's representative of some money flow in here. And you'll see it right there at the 225 strike price. That gives us a target. It gives us a time frame. And again, we're looking at gold retesting the prior highs up here. Again, we'd previously seen some positive gold trade in the last couple of weeks as well. Again, another big one today, looking to retest the prior highs. If we look at silver, or more specifically silver stocks like a Pan American Silver, yes, down 0.25% today, but again, the trade was a July expiration. So let's come out here to July, and out here at the 21 strike price, we're seeing calls being bought in Pan American. And again, 21 gets you here. We start to break 21, maybe the gamma squeeze that could push us to 22.5. You can buy the lower strike, sell the higher strike, particularly in gold, GLD as well. And again, just playing that upside call spread in the near term, benefiting by the rising volatility of those out of the money calls in particular. Now, if oil prices continue to rise, it's going to have a negative effect on airlines, right? Jets, for example, is an airline ETF. We're kind of coming off support down here. We have a support level at 1916. We're really looking for Jets to kind of retest and break through 18. Heck, maybe even retesting the lows back from October. This is it's a trend we kind of rode for a while as well. But if we look at Jets, this is a December expiration, so it's out here just a little ways. But if we look at the downside, this is in the money here at the 23 strike, in the money puts being bought today. Again, just representative of, again, the general pressure or negative money flow coming to the puts. And again, really looking at potential downside, more near term to 18, maybe stretching down to 15. If we look at Southwest, these are both issues that we saw puts being bought on last week, but a couple trades on Love for over a couple of days. Friday, bearish on Jets, but LUV, not as liquid as they once were here, but at 28 June, Yeah, plenty of depth in here, but again, on the put side, we're looking at LUV. We're looking at the 2850. So buying in the money here slightly, but again, this is one of several trades over the last week we've seen on the bearish side in Southwest Airlines again, and jets as well for the second day in a row, looking for further downside in these issues. So again, the only stock that matters, Nvidia. The only sector that matters is energy, because again, on the bullish side, this is the one that probably makes the most sense given what we're seeing here. Not utilities, not staples, not financials, not real estate. This is all banking on what? Lower 10-year treasury yields. So watch off that, key off that. This may be a great opportunity to start to get short if yields start to go up and prices down. And again, Nvidia is still further bearish activity today, but bullish option activity in XLE kind of rounds out today's analysis. And we'll catch you back in the video next.